Hi, everybody. Chris Englebert with Englebert Financial Advisors in Allentown, Pennsylvania. And guess what? It's the first of the month update for June already. If you can believe, we are now into summertime. Schools are out, colleges, high school graduations. We're all in the midst of it. But what's going on in the market? That's what we're going to delve into over the next couple of minutes. So, again, if you want to see this presentation, it's being sent to you, but you can also get it off of my app by downloading my app. If you don't have my app, I strongly suggest you get it. Text Chris E, Chrise, to 36260, and you can download my app. So what's been going on so far in May and the first part of June? Well, the S&P 500 has been led by a very strong semiconductor rally. It's all about the AI chips. Some of the semiconductor stocks are saying that they're sold out through 26 and partway through 27. But what happened the first Friday in June? A couple of rumors swirled around. The Kospi index, the South Korean index, was down sharply last Thursday night. That led to a rough Friday with the NASDAQ down almost 4%, S&P down 2.5%. As of the time we're going to see this video, we are getting a bounce back, but let's see what June brings. We would not be surprised after the strong rally that began April 1st to see some type of pullback or consolidation over the next couple of months. And let's talk about the semiconductors. They have gone parabolic. Now, one of the things that we see is that a lot of people still watch CNBC and get their news there, and they're hearing about all of these different semiconductor stocks, Micron, Broadcom, Intel, you name the semiconductor stocks, they have obviously gone up a tremendous amount. If you look at their charts, they have gone parabolic. Now, one of the things that we try to do is we try to have our clients remain disciplined and not change or not chase super hot sectors like this. So it's not that we're saying that you should sell all your semiconductor stocks or not buy any semiconductor stocks, but we are in a dangerous period right now where some of these semiconductor stocks could have pullbacks 10, 20, 30%. A lot of people don't remember last spring and April during the tariff tantrum, which was a year ago, we saw some semiconductor stocks pull back 50 to 60%, which was very sharp. And obviously, if you got into them at a wrong time, you could get hurt. Let's talk about what's going on this year. Again, our theme is that it's everything except the Mag 7. If you look down at the bottom of this slide, you can see that the S&P 500, which is represented by the VOO as of Friday with the pullback, is still up 8.45%. But you can see that the MAGS, M-A-G-S, is an ETF made up of the Magnificent Seven, which if you haven't watched any of my videos, obviously it's Apple, Amazon, Meta, Microsoft, Netflix, Google, Nvidia, and some people say also Broadcom is one other stock in the Magnificent Seven, which would make it 8. But you can see that that's only up 0.83 for the year. Meanwhile, commodity funds are up, small mid-cap funds are up, and you can see that we've had quite a nice rate of return in some of the other areas than just focusing on the Mag 7. And we continue to believe that that's going to be the way it is for this year. There may be periods of time, and there was end of May, beginning of June, where the Mag 7 stocks began to light off a little bit, led by Google and Apple especially. But again, we think you need to be more diversified for this year. The other story is that what's going on with interest rates. So you can see on the left side of the screen that when the war started, interest rates rolled over and dipped below 4%. But then as higher energy prices took hold, the fear of inflation is squarely back right now. And you can see that the 10-year topped out right around 4.6%. It's hanging on right around 4.5%. And again, we've been getting some hot inflation numbers. And one of the areas that we want you to watch is that we've seen a change in the Fed, not only the Fed chairman, but we've seen a change from a possible reduction in short-term interest rates to actually short-term interest rates maybe on the rise in the July meeting for the Fed. So how do you track short-term interest rates and know what's going on? Look at the 2-year Treasury notes. It will tell you, especially where CD rates are going. So we can buy CDs here at Schwab. There's about 100 banks that put on what they call brokered bank CDs. and we can buy them for clients 1 month, 3 months, all the way out to 10 years if you want. Right now, we're buying 3-month CDs right around a 3.95, but you can see, according to this chart, that the 2-year note is over 4%. So it looks like short-term bank CDs are going to get over 4%. And again, this is the change from our outlook. Our outlook coming into this year is that we thought the Fed was going to be able to lower short-term interest rates, but because of the inflation numbers that are out there due to higher oil prices, the Fed is now fighting defense. And what we mean by that is they raise short-term interest rates in order to fight inflation. So it's not a bad thing if you're looking for risk-free, safe rates of return, because you're going to get short-term treasury bills and short-term CDs back over 4%. But we do think that longer term, this could present some type of drag on the US economy as everybody's beginning to look at inflation, saying, is this something that's now firmly entrenched? Are interest rates going to have to go higher? We think that we're pretty close to the high point for rates for the year right now. Stay tuned, though. We'll see what happens next. So, in conclusion, for June, S&P 500 price action did continue higher into May and the first week in June, but the frothy price action in semiconductors led to a pullback. The question is, will this continue through the months of June, July? We would not be surprised to see some consolidation for June, July, and possibly in August, mostly because, well, obviously people are going on vacation. But the big takeaway from this video is that short-term interest rates are rising. The Fed's next move could be to increase interest rates at their July meeting, which is obviously good news for CD buyers. So again, if you're concerned, if you get this video, reply back to us. We're more than happy to set up a meeting, discuss your portfolio, let you know what we're doing with it, and how we're actually positioning people for the back half of the year. So that's the June update for 2026. Chris Englebert will be back next month. We'll talk to you soon.